EVs this morning. Tesla's seen a bit of weakness overseas with the worst month for EU sales since January of 23. Pretty different picture in China, though. XPeng driven higher by some strong sales in its latest results.
Is Tesla taking a hit in the market this year? Truth is, Tesla is experiencing some weakness overseas, with the worst months for EU sales since 2023. In China, XPeng is performing well. There is concern that Chinese monopoly in the market could threaten security. Is China taking over the EV kingdom? For years, the only choice for electric vehicles in the US has been Tesla. Now, in the EU, you have many alternatives from the big manufacturers, and they are gaining shares against Tesla. Tesla's share of registrations is decreasing, so Tesla is losing share in the space. Is the difference because of the competition from China in the EU? Clearly, BYD is there in a big way. But there's also strong competition from European and Scandinavian markets, including Volvo. Do you think it's the price that's driving it? Its price is at the lower end of the market for sure, because BYD has options that are really popular, especially in countries like Spain. Elon said something in the quarterly call. He mentioned that if you're in the stock for being in the car business, you might want to look elsewhere. We think he means that. We also think that he's going all out on autonomy. He sees that competitive battle coming, and in the future, the battle might not be about electric vehicles, but shifting towards autonomous vehicles. The EV future is alive and well, already a $70,000 billion business in the US, if you combine new EV car sales with used EV car sales in the first quarter. Remember, Hertz unloaded tens of thousands of EVs on the market. Used sales went up. That doesn't include the used cars, so once the used cars dry up, that demand will rotate back to new. Can we even produce EVs like they do in China at the same price point and quality? It's really difficult because there's about $28 billion of subsidies in the EV market in China by the government. So, free factories, interest-free loans, and very low-cost labour make it difficult to compete at that price or cost level from the US. That's why it's really important, a lot of people believe, to protect the US manufacturers from them. There have been a lot of reports. Goldman did a report a couple of days ago looking at purchase intentions among EV buyers and Tesla's rivals. Clearly, there's a lot going on with the brand. About 80% of Tesla's sales came from very affluent areas, so there's a shift happening in that demand to other markets. Meanwhile, it's nice for GM to have both options. The ICE business funding the transition to EVs. On the EV side, they've got EVs in the $20,000 to $30,000 range, $30,000 to $40,000 range just coming to market literally this month. So now we're going to see a real alternative. After tax incentive, you have a $29,500 Equinox. That's a really nice car. And a lot of us have been driving it and fell in love with it. 310 miles of range for that price. On the charging network in general, does Tesla's de-emphasis of that business mean there's going to be a range anxiety as a result? That was a head-scratcher, letting the team go on a critical piece of Tesla's strategy. But the US and foreign manufacturers have come together to form their own supercharging network, and they're now rolling out superchargers. Despite a post-earnings rebound and optimism about full self-driving, Tesla's stock has dropped 28.8% through May 17, making it one of the worst performers on the S&P 500 this year. Shares are more than 50% below their late 2021 all-time high. However, Tesla hasn't recovered in recent months due to lower than expected deliveries, despite ongoing price cuts affecting earnings estimates. Elon Musk cheered Tesla bulls on the April 23 earnings call with the talk of affordable EVs, robo-taxis, and high deliveries in 2024. A few days later, Musk reportedly won tentative approval to launch FSD in China. However, Wall Street has kept cutting its earning estimates. According to FactSet, analysts now project 2024 earnings per share target at $2.44, down from $3.79 at the end of 2023, $5.62 at the end of March 2023, and a substantial $7.07 at the end of 2022. As of May 5th, the forward price-earning ratio for Tesla's stock is 72.8, except for April 30th. That's higher than any end-of-month reading in at least the past 18 months. It's well above the 2024 PE ratio of 36.9 as of March 31st, 2023, and even higher than the 17.4 PE ratio at the end of 2022. The same trend holds for 2025. Analysts have cut Tesla's earnings per share estimates for 2025 to $3.32, compared to $5.27 at the end of last year. Analysts expect $6.95 on March 31st, 2023, and $7.93 at the end of 2022. Tesla's valuation is significantly higher than that of other profitable automakers. Toyota Motor has a forward PE ratio of 9, while General Motors has a forward PE ratio of 4 among EV players. Li Auto has a forward PE ratio of 13, and EV giant BYD has a forward PE ratio of 17. Ferrari is the only one close to Tesla with a forward PE ratio of 50. Investors Business Daily typically doesn't focus on price-earning ratios, as many leading stocks have high valuations with investors betting on strong growth to justify them. During its significant growth phase, Tesla was a high-growing company with high PE ratios. However, it's not a growth company right now. Of course, increasingly, the Tesla bull case is looking beyond 2025. Some analysts, most famously Morgan Stanley's Adam Jonas, attributed the majority of the Tesla stock. Clearly, much or even most of Tesla's current market valuation is a bet that some of those ambitious projects will pay off down the road, delivering massive profits. Whether or not they pay off is an open question, but Tesla's stock still isn't cheap. How much is Elon Musk worth to Tesla, the company he leads? In 2018, Tesla's board created a plan to give Musk shares worth $46 billion over 10 years if the company met certain goals. In January, a Delaware judge called the package unfathomable and struck it down after a shareholder sued. Tesla is now asking its investors to support the award again at the annual meeting on June 13th. Musk's huge pay package is nearly 300 times what America's highest paid CEO, Hock Tan of Broadcom, made last year. It also equals 8% of Tesla's current market value, which has dropped by about 20% over the past year. Meanwhile, Elon Musk might be facing his toughest challenge yet as CEO of Tesla during the upcoming annual shareholders meeting on Thursday. With the meeting taking place at Tesla's Texas headquarters, it feels like Musk's own personal Alamo. Musk's reputation and that of the entire board are on the line, especially after a Delaware state judge declared his $56 billion pay package from 2018 invalid due to governance issues. The package is now up for ratification by the shareholders. Musk is also pushing to move Tesla's legal headquarters to Texas following the court ruling. Musk had said he plans to stay with Tesla as long as he's useful. However, if a significant number of shareholders vote against him, it could be seen as a lack of confidence in his leadership, potentially signaling the beginning of the end of his long tenure at the company. Tesla argued in court on Friday that the legal team responsible for voiding Elon Musk's massive pay package should get only a tiny fraction of the $5.6 billion legal fee they requested. Tesla said that the lawsuit, which started in 2018, provided almost no benefit to the company. The team representing shareholder Richard Tornetta should be paid as little as $13.6 million for their work. Meanwhile, Japanese Transport Ministry officials began an investigation at Toyota's headquarters over a vehicle certification scandal. Musk's pay package is the largest ever granted to a CEO in the US. Tesla argued that if shareholders vote to ratify the voided pay package at the upcoming annual meeting, the lawsuit's main benefit was informing investors about the flawed negotiation process, allowing them to correct it with a new vote. Tesla's filing with the Delaware Court of Chancery stated that the plaintiff's legal team achieved little to no discernible value for Tesla or its stockholders. The legal team consisted of three law firms: Bernstein, Litowitz, Berger and Grossman, Friedman, Oster and Techtel, and Andrews and Springer. Tesla's objection to the legal fees comes as the company seeks shareholder support to restore Musk's pay package and approve moving Tesla's legal home from Delaware to Texas, where its headquarters are located. Musk criticized Delaware after the pay ruling. Tesla argued that the ruling did not result in the return of any stock because Musk never exercised any stock options, the form of payment underlying his compensation. Hundreds of Tesla shareholders have written to the company or the court to object the legal fee request. One shareholder, Amy Steffens, who holds 19,000 shares, filed a formal objection to the fee request, represented by the Munger, Tolles and Olson law firm. So share your views with us in the comments section. Also hit the like and subscribe button to watch such contents.